Gentlemen, the question most retirees ponder is how much money they should take out of their financial plan each month to meet their spending needs. For a long time, a lot of people have subscribed to the 4% rule, but a columnist in the Wall Street Journal has his own that he calls the $400 rule. He says you'll spend about $400 each month in retirement above and beyond what you think you're going to spend. Uh, what are your thoughts on this? How would you factor that into a retirement plan?
Well, again, an income plan is about turning assets into income and just putting all of your assets in one bucket. Texas Tech did a study in 2013. What they found is that those that used a 3% withdrawal actually had a 20% failure rate. And those that actually had more conservative investments, like for instance, more than 50% and conservative products, after 30 years, they ran out of money. And it's really hard to diversify your assets if everything's a mutual fund. Wouldn't you agree, Nolan?
It really is. And, when you look at this 4% rule and what's the safe withdrawal rate, that's one of the things that people come in and they ask. Morningstar also put out a good study, and they look at the withdrawal rate of what people take out. With their study, if you look at it and you start to factor in things like fees and expenses, cost really is an important equation when it comes to looking at what a good withdrawal rate is. One of the biggest things that I think about is the mind shift. It's something that we've talked about on the radio a lot, and that's the difference between the accumulation phase and the distribution phase. What's called the sequence of return risk is a big risk that many retirees face that can blow up that 4% rule in a heartbeat. Do you talk much about that sequence of return risk with investors?
I do. In fact, every time I'm sitting down with clients of mine that are facing retirement and it's time to kind of shift and preserve some of their capital that they've been working for their whole life, I actually describe sequence of returns as dollar cost averaging evil twin brother. During the accumulation years, that's fine. If you're buying when it's low, it'll come back up. But in the distribution years, when you need to convert assets into income and you try to take a withdrawal when things are down, it's going to severely impact your retirement plan.
That's why, again, looking at your own situation, one of the things to do if you're figuring out, what is a good withdrawal rate, one is we have our financial planning software where we can run the probability of success. So what we'll do is we'll put all of your financial information in there, and we'll run the numbers on what your income needs are in retirement time, and we'll look at overall, based upon 2,000 or 3,000 possible outcomes, what is the probability of success? Then what we can do is we can stress test a portfolio and we can look at what are the biggest dangers or what are the biggest threats for your retirement. It could be a near-term market risk, like we're talking about for sequence of return risk. It could be higher healthcare costs. It could be the loss of a loved one in early years and a loss of income. It could be higher taxes. It could be a failure of Social Security. But by running the stress test, what it allows us to do is it allows us to then look and identify. And, if we knew sequence of return risk was the biggest risk a retiree faced, the good news is now we know what type of financial products may be better suited for that individual investor to avoid market declines. In your example, a lot of investors that, maybe had too conservative of a portfolio, there could be ways that they could reposition those assets to get them to work harder. It could be a change in the asset allocation. It could be making sure that every dollar works as hard as possible because, look, folks, if you're retiring and you don't want to get up and go to work tomorrow or in the future, you need to make sure that your money is working as hard as possible and make sure that every dollar is working as hard as possible so you never have to worry about outliving your income. And really, that is a way to kind of debunk the retirement rule. And so if you're worried, you're thinking, what's the right number? What's the best way to figure that out? Let us run a portfolio stress test for you. Let us run the probability of success. Let us have a conversation with you. And, as we head and finish up into the 4th of July holiday weekend, we just want you to have financial freedom and peace of mind for the rest of your lifetime. And if this is the best call that you make this weekend to help take that step towards financial freedom, then what a great phone call it is, and a phone call that we welcome you to give us a call, and we'd be happy to stress test. But Curtis, hey, appreciate you joining us this week. Great to have you here, as always, and joining us on the show and sharing some wisdom with our listeners here on Toledo's largest talk station.
Thanks for the opportunity to be here, gentlemen.
And again, one last time to wrap up, the number 419-794-3030 as we enter into the weekend here. Hopefully you can take the time, make that call. Could be the most valuable conversation you have, having that portfolio stress test. Remember, at the end of the day, it's a Goldilocks approach. You don't want a number that's too aggressive, that's too conservative. You want one that's just right for you. The more complicated part of it is what that number actually is. That's where the team at America's Retirement Headquarters comes into play. Again, 419-794-3030. Thanks so much for joining us as always. Please enjoy your weekend. Be safe out there. And as we wrap up here, guys, I want to leave you with the final word.
Well, a good quote this week, which is being rich is having money. Being wealthy is having time. So, again, we've got an extended weekend with the 4th of July coming up on Tuesday. We want you to have some time this weekend to enjoy with your family, whether it's cooking out, whether it's going to the neighbors, enjoying the pool, whether it's getting the boat out and cruising up and down the Maumee River. Take some time to enjoy your family this week. And, of course, be safe with the holidays. Make sure if you see a veteran or active duty military, tell them thanks. Thanks for the freedom that we have today. And also thanks for our first responders. We really, really appreciate you. And just remember, when you think retirement, think America's Retirement Headquarters. It's home of the Retirement Guys formula and America's Medicare Associates.